big miss in inflation leading to lower interest rates. So according to Mortgage News Daily, interest rates are finally starting with a 6 again, today at 6.99%. Now remember, that interest rate does have a lot of factors. You have FICO score, loan to value, a lot of information that plays into that interest rate. That being said, we've seen a 0.5% reduction in interest rates according to Mortgage News Daily in just the past 30 days, which was really fueled by today's inflation print. So inflation has been really sticky in 2024. The Fed was adamant that January and February was an anomaly, that hey, new year, new price, we expected inflation to come in hot. But then they expected March and April to be better prints. We didn't get that. We got hotter than expected prints pretty much all of Q1. So then it led to higher interest rates because people were fearful that this was going to be the 1970s again, and then we were going to have back-to-back inflation just skyrocketing. Don't forget, inflation was above 9% just 2 years ago. So people were scared, oh, we dropped down to 3, now we're up to 3.5, we're going to continue going back up to 5, 6 again. That's not going to happen. And now the Fed was adamant, and now we have confidence. Sometimes you just need the data to print to give the market more confidence that that's not going to be the case. So inflation came in at 0.3% month over month, and last month it was 0.4%, and the big one that we're looking forward to is 1 month from now. So the Cleveland Fed uses nowcasting, which predicts inflation on a day-to-day basis. So through 15 days in May, inflation through May is only at 0.1%. If this trend continues, then the trend again becomes our friend. We'll go from 0.4 to 0.3 to 0.1, showing inflation is trending down, and the Fed was right. They were just right a little bit later than they predicted that inflation would start coming down. And in reality, remember, this inflation print is with a 5.5% shelter inflation. So shelter is the largest indicator in the inflation report. It's a very big important factor, and it's at 5.5% year over year. But shelter, which is mainly rent in the inflation report, is a very lagging indicator. And when you go to apartmentlist.com, it shows that apartment prices and apartment leasing is actually down. It's actually negative on a year over year perspective, but it's a 12-month lagging indicator. So inflation's at 5.5% from shelter, but apartments are actually down 1%. So that gives us more ammunition, more of a signal that inflation from both core and headline will continue to trend lower in the back half of Q2, Q3, and Q4, leading to better inflation prints and giving the Fed more confidence that they can cut interest rates. So last week, we projected that the Fed would cut interest rates on September 18th of this year. Now that percentage from the CME futures has actually risen to about 55%. So the CME futures actually agrees. However, CME futures have been wrong for about 2 years in a row now, thinking that the first rate cut was going to be in October, then in January. But now we're looking that September looks likely because all the data is pointing to that. Labor coming in weak several months in a row or slowing down. And then we finally got this good CPI print, and next month should also be good, giving the Fed all that they need to hopefully lower interest rates in Q3 and in Q4 this year. So if you're a buyer waiting on the sidelines, know that it is likely interest rates will start trending lower over the course of the next few years. Hopefully this remains the case. So reach out to a Secure Choice Lending team member. We'd love to help you out.